Hey everybody, Smart Silver Stacker here. Hope you're doing well. So the price of both gold and silver have surged in real terms over the past 2.5 months. And when I say in real terms, what I mean is it's not just a falling US dollar that is to account for the increase in the price of the precious metals. And today we're going to take a look at some charts and I'll tell you exactly what I'm talking about. I also want to get into why the metals are surging the way they are. One clue can be found in the most recent data out of the US Treasury in the form of the monthly Treasury statement, which reveals that we are on track to potentially hit a $2 trillion deficit. And we're going to take a look at that because really the numbers are kind of shocking. Also, we've got the war drums beating over in China surrounding Taiwan and Taiwanese independence. And certainly war is a very inflationary enterprise, so that could have something to do why the price of precious metals are going up. However, there are some reasons why a war with China specifically could really drive the price of the precious metals to absolutely astronomical levels, and they don't have anything to do with inflation per se, so we're going to get into that in today's video as well. And then also, today, there's some very interesting science news that just came out surrounding the precious metals, gold in particular. And, it's just another one of these applications for the precious metals, which demonstrates why they are so valuable and why they are so useful to mankind. So we're going to get into all of that in today's video. It's a very interesting, and I think it's about to be a very rewarding time to be a gold and a silver stacker. So let's get to it. Okay, so let's start off with this surge in the real price, the price of gold and silver in real terms that we've witnessed over the past 2.5 months or so. Now, we've got the 3-month chart for gold pulled up here over at sdbullion.com, channel sponsor. Check them out with the link down in the description. If you want to get some gold or silver at spot, you can visit sdbullion.com/new. They've got some offers for new customers over there. If we go back to February 1st, so on February 1st, the price of gold was around $1,953, okay? And then if we look at the price of silver here, we can see $24.05. Now compare that to the price today. Right now in gold, $2,050. That's more than 4% higher than the price on February 1st. And then in silver, much the same story. Right now we're at $25.90. We were at $24.05. That's more than a 5% increase over the price from February 1st. Now let's take a look at this chart of the US dollar index. And if we go back to February 1st, we can see that the US dollar index was right at 101.22. Today, 101.02. So a very, very small difference there. We're basically at the same level. In fact, earlier today, we were at 101.32. So we're right in the same ballpark on the US dollar index that we were on February 1st. And this is a very important distinction to make because this indicates that this rise that we have seen in the price of both silver here and in gold, it is not due exclusively to a decline in the purchasing power of the US dollar. The US dollar index at a very similar level to where it was on February 1st, but the metals are both up around 5%. Silver a little bit more, gold slightly less. But I think frequently when we see the price of gold go up or the price of silver go up, we attribute it to a decline in the US dollar index. We think these things are always inverse to one another. And that is a correlation that we witness very frequently. However, in this instance, that's not what's going on. This is an indication that a lot more money, a lot more interest has come into the precious metals space, and the prices of both gold and silver are getting bid up in real terms. Now, I do think this is a trend we are going to continue to see. We know that in addition to an increase in the price of the precious metals, the spot price, we're seeing a huge influx into the physical space. SD Bullion still has this minimum order of $500. And again, they have to do that because they had such a huge influx of orders over this time period that they're having a hard time fulfilling them. So, businesses typically don't want to turn down business, but if you get to the point where you have more than you know what to do with, you have to, stem the flow somewhat until you can get through fulfilling those orders. So what is driving this increase in the real price of both gold and silver? Why are investors getting into the physical space? Why are they bidding up the spot price like this? Well, there's kind of a perfect storm going on right now. We've got Domestic policy, we're spending a ton of money, way more money than we have. The dollar is getting inflated away. And at the same time, we have a very troubling geopolitical situation. So for starters, the domestic situation, we have this monthly treasury statement, which was put out at the end of March. It's for fiscal year 2023. So that starts in October. So this covers a 6-month period, October 2022 through March 31st, 2023. And really, there's just one panel here that I want to draw your attention to, and that is this cumulative receipts, outlays, and surplus deficit through fiscal year 2023. So again, this is the first 6 months of fiscal year 2023, October through March. And you can see that the deficit here, $1.1 trillion, or as they have it labeled here, $1,101 billion. And the data for March alone is pretty troubling, a $378 billion deficit in March alone. But this is absolutely stunning, this level of deficit spending. You know, I've talked about in the past how it took something like 200 plus years, I think about 205 years, for the U.S. to accumulate the first $1 trillion in debt. And now we just racked up 1.1 trillion in a 6-month time period. So think about that. You know, this is an exponential process, and the debt is absolutely exploding. It is in the process of going much higher. You notice one of the biggest expenses here on the outlays, we've got Social Security, okay, health, you know, that's Social Security and Medicare. We know that these programs will eventually go bankrupt. You know, they'll probably get paid, whatever the benefits will get paid, but they're going to get paid in devalued currency because there's no way that you can sustain this level of entitlements. And income security, I'm not sure exactly what that is, but we got national defense here, $408 billion. So you've got, you know, the guns and butter type economy. You got all this domestic spending. You got all this war spending. This is all being financed by borrowing, of course, with the $1.1 trillion deficit. And the net interest here is the thing that I find really most troubling. $301 billion in 6 months just in interest. And you know, it's very likely we're going to continue to see inflation move up. I know we did just get kind of a cooler than expected CPI, but you know, for one thing, the CPI numbers are cooked anyway. So 5%, you know, in real terms is probably about 10% annual inflation. It's still extremely high. It's nowhere near the Fed's target rate of 2%. So, you know, inflation is still a huge problem here. And so the Fed is probably going to keep cranking up rates. I mean, who knows? They might take a little breather here, especially if they just got this cooler than expected CPI, but the rates are not coming down anytime soon. Or if they do, we're just going to enter into a hyperinflation. But the reason I'm talking about interest rates is because this net interest on the national debt, $301 billion, you know, if rates continue to move up, the U.S. national debt, a lot of it is financed with short-term notes. So those are going to continue to get rolled over, and they're going to be refinanced at a higher interest rate. And so this net interest is going to continue to balloon. And I think that we're headed towards a situation, I don't know how long it'll take to play out, but in the next couple of years, we're probably going to see the net interest on the national debt become one of the biggest items on the budget. And when that happens, that is when you're really going to see the deficit explode. I mean, unless, you know, the government cuts all this other spending, but what is the likelihood of that? You know, in a democracy where voters have become accustomed to voting for these socialist type entitlement programs, this massive government spending, there is no politically viable option to cut this spending. And so likely what we're going to see is a massive level of inflation. You know, all this spending is ultimately going to get financed via inflation and via debt monetization. So that's probably part of why gold and silver are surging the way they are. Now, before we get into the war news, I do want to take a look at this slightly less ominous story here. This is gold-based antibiotic could be key to fighting superbugs, research suggests. And what this article is covering is some new gold-based novel compounds. Sarah Soto Gonzalez of the Barcelona Institute for Global Health tried 19 of these gold compounds against a range of multi-drug resistant bacteria. You know, that's a huge problem. We've got these antibiotic resistant bacteria, MRSA and other things. They don't respond to conventional treatments. And so, you know, the pharmaceutical companies are always trying to come up with something new to fight these superbugs. And it's one of the good things that the pharmaceutical companies do, among other activities that they engage in. This just demonstrates why gold and silver really are so useful and so valuable. I frequently hear from people who seem to otherwise have a good grasp of what's going on that, gold and silver only have value because people ascribe them value. They, are really just rocks that you can just stack up in a warehouse somewhere. No, gold and silver are extremely useful compounds. They have a ton of applications in industry and in science and in medicine. And you can do all this amazing stuff with them, but they're very scarce. And that has a lot to do with why they are valuable. So, when people tell you that gold and silver are just rocks, you got to realize you can't walk outside and find, a piece of quartz and create a antibiotic that can kill superbugs. And, gold and silver have all these other unique characteristics. Silver is the best conductor of electricity and heat on the periodic table. Gold is extremely ductile. It doesn't corrode. They have all these very novel characteristics which make them useful. And we'd probably see them get used in industry and for a number of applications a lot more, except for the fact that they're so valuable because they're scarce. So, when you hear somebody say that, the reason central banks store gold is because of tradition, like Ben Bernanke, or you hear somebody say that gold is just a rock that you can stack up in a warehouse, pretty sure that's something we've heard from Warren Buffett in the past. Just remember, these are actually incredible compounds that have a number of unique properties that make them very, very useful in industry and science. If you haven't checked out channel sponsor Silver Botanicals yet, you should definitely check them out. They have an amazing line of household and personal hygiene products that are powered by nano silver. Just another example of how useful silver can be. Silver is a completely non-toxic compound, but it's antimicrobial. Personally, I really like their mouthwash and their deodorant over at Silver Botanicals. They're powered by nano silver and natural essential oils, so all natural stuff. Very healthy choice, very good alternative, I think, to aluminum-based antiperspirants. So check them out with the link down in the description, and you can use coupon code STACKER to save 10% off your purchase there. Now, let's get into this war news, because it does seem like things are heating up quite a bit over in China and Taiwan surrounding the whole Taiwan independence thing. Most recently, we had French President Macron visiting China, meeting up with Xi, and now he seems to be of a mind that Europe should stay out of any future conflict between the U.S. and China. And so it looks like the U.S. might have to go this one alone. You remember that movie Red Dawn? If you've seen that, leave me a comment down below. It's a great flick, and I think that in that movie, the Europeans sit out World War III, so that might have been kind of prescient. And if you haven't seen Red Dawn, not the remake, but the original, with Charlie Sheen, the high school athlete fighting off the Russian invaders in the U.S., definitely make sure you check that out. And China, of course, did just wrap up these military drills surrounding Taiwan. They have an aircraft carrier out there in the South China Sea now. They practice encircling Taiwan. Now they say that they're ready to fight. They've really been ratcheting up the rhetoric surrounding Taiwan a lot. We've had a senior U.S. military official who's warned that we may see war with them as soon as 2025. And really, with the level of brinksmanship that we're seeing surrounding Taiwan, I mean, this conflict could pop off at any moment. You hear a lot about Ukraine, but just take a look at the fleet deployment here of the U.S. aircraft carriers, and you can see that there's one aircraft carrier over in the vicinity of Ukraine, but we have 4 over in the vicinity of Taiwan. So it really tells you what the U.S. priorities are here at the moment. And you have to look at things like this when you're assessing this situation, because you never really trust what's coming out of the mouths of the politicians, the talking heads surrounding these conflicts, because they're just trying to manipulate opinion whatever way they think is best for their objectives. But when you see something like this, where the U.S. is deploying 4 aircraft carriers in Asia and 1 in Europe, you realize that Taiwan is probably going to be the location where this next major kinetic conflict kicks off. And when that happens, it will have a major impact on the price of gold. One reason is because war is very inflationary. Typically, they're financed via debt. A lot of the major hyperinflations that we've seen throughout the world have followed major wars. We had the Weimar Republic. They had a hyperinflation following World War I. In Hungary and several other European places, there was either runaway inflation or significant inflation following World War II. World War I and World War II are what caused the British pound to lose its status as the world reserve currency, to be replaced by the dollar in the Bretton Woods Agreement. So, wars definitely have a tendency to shake up the global financial order, even if a country is on the winning end, like Britain, for example. I mean, they were on the winning side of World War I and World War II, and yet they still lost their currency's world reserve status as a result of all the spending and the debt from those conflicts. So that will certainly have a big impact on the price of gold. But just take a look at this. This is the major gold producers around the world, the top gold producers, data provided by the World Gold Council over at gold.org. And you can see the two top producers, China and Russia. So if China and Russia are the world's biggest producers of gold, what do you think is going to happen to the price of gold in the West if we go to war with them? Because that's certainly going to cut that supply chain off. It will affect global precious metals inventories. We're used to a globalized economy in this day and age where, everything is basically the same price around the world. Oil, more or less a global commodity. Precious metals, a global commodity. The price of gold is going to be the same more or less around the world. But, if we see this conflict deepen, we're already seeing the breakdown of globalization, with the embargoes and the sanctions. But if we get a kinetic conflict breaking out between either the U.S. and China or the U.S. and Russia, probably both at the same time, the way things are going, we will see a breakdown in that price system. There will be different prices for commodities in different markets as trade falls apart around the world. So a war with China, it's going to make the price of a lot of things go up quite a bit. All the manufactured goods that we import from China, for example, will become unavailable or much pricier. Price of gold also is going to suffer from that same effect. Or, if you're a gold and silver stacker, maybe you won't view it as suffering. Maybe you'll view it as a good thing. I don't know. I think it would be better for all of us if we stayed out of these conflicts. But if you want to mitigate some of the economic pain that will result, probably a good way to do that is to be getting into some hard assets. And I think that that's why we're seeing this big move up in the price of gold, up another 1.5% so far today, up to $2,050. We are within striking distance of a new all-time high close. We did recently have the highest quarterly and monthly close on the books for gold. That was at the end of March. And now I think we're going to start getting towards a new all-time high on the daily close also. I think the previous all-time high close for gold, $2,075. So we're just a hair's breadth away from that. In fact, if we get another increase either later today or tomorrow, like we've already had today, and if it goes up another 1.7%, we will be over that all-time high. So certainly something to keep an eye on. Despite the fact that the metals are elevated, I do still think it's a good time to be getting into them. Not financial advice, just telling you what I'm doing. I've got some gold that should be showing up soon from SD Bullion. I'm glad I locked in the price when I did. I picked that up when the price of gold was under $2,000. So very happy about that. And I will be continuing to stack as this situation plays out. Leave me a comment down below to let me know what you think about all these developments. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.